Hey guys, how's it going? And welcome back to another video. My name's Dion and today I'm going to be doing a trade breakdown. So I haven't done many trade breakdowns recently just because I've been learning a new system, a new model. If you've been keeping up with my videos, then you know I've been doing ICT. So I've got a trade breakdown here in front of me. This trade was not actually executed on. I had missed my entry, but it did provide a really nice setup which played out very well according to my trading plan. So I won't be going through in detail my trading plan in this video, but I will be using it to analyze this trade setup. I will make another video either today or tomorrow going through the trading plan so you know exactly how I'm doing it and how I'm trading. It's probably the most clear, easy to understand, easy to follow trading plan I've ever had. And this is because I've decided to use the ICT model. You trade one time, one setup, it's just very simple. So let's get straight into it. But before that, I want to give you a little breakdown. So two things I was looking for to start with is what is my bias? So where do I think price is going? Are we going higher? Are we going lower? Then second of all, based on the bias, where is the target? So obviously if I'm looking for price to go down, then I'm looking for a target to the downside and vice versa. So once I have my bias established and I have my target established, next we have to wait for the kill zone, the time of the day which this model or this trade setup sets itself up. Now, for me, this is the AM session for New York. So for Adelaide, because I'm in Adelaide at the moment, Adelaide time, that's about 11:30 p.m. So I've got to stay up a little bit later to try and catch this trading session. So once I have my bias established, once I have my target established, it's a matter of waiting for the New York AM session. Now, we'll head over to the charts and I'll show you what that looks like. So I'm starting off with my analysis already on the charts, so I'll take that off real quick. This is price action. Looks very choppy, looks very messy. I don't know, people may consider this as price is not trending. But for me, I didn't consider that or whatever. I just stuck to my plan. So first, my bias was established. I was going short. I'm not going to go into why because I have to go into the weekly and the daily timeframes and do a breakdown. But for the sake of simplicity, I was looking for price to go low. Now, if I'm looking for price to go lower and I have my established target already here, what needs to happen? What do I need to see? Well, based on this model, I need to see some sort of buy stops be taken. I want to see a rally. I want to see people who are going short get swept out. I want to see retail think they're right and then get stopped out by market manipulation or stop hunts or anything. So I was looking for price to go up. Now, where do I want to see price come up to? I was looking for either buy stops to be swept or a fair value gap to be balanced. So I'm going to talk about this push up here because this was the sweep I was looking for. Now, I do pay close attention to the London session because when I'm looking for a trade, I'm looking for London highs or London lows to be taken out. So London, using the New York time, is anywhere between 2 a.m., which is here, to 5 p.m. So 5 being there. So the London high was this level here. So I defined this with the white dotted line. I will explain what the purple one is later. But this was the London high. We had that push up, which I was saying I was looking for because we're looking for price to come down. I want to see buy stops being swept or I want to see a fair value gap get balanced. We had both. So this red line signifies the start of the day at 12 a.m. Now, if we go to the left, if we look for swing highs, usually that's where the buy stops are, but we want to look for the swing highs that generate a strong push to the downside. So let's see. Here's the 12 a.m. Here's the first swing high, but there wasn't really a strong push down here, was there? Price consolidated, ranged a bit. Here's the one that I was looking for. Here is the swing high, which created this big drop. So I reckon there are lots of buy stops above here, and right next to it is this unbalanced fair value gap. So I was looking for this area to get swept as well. So once we had London swept, we came along, broke yesterday's swing high and balanced the fair value gap. So what this did was it's telling retail that, hey, we're making higher highs and higher lows, so you should go long. Look for that break and retest. Put your stops below the last low. But that's what I'm looking to be taken out. We saw price push up, did what it did. And what that does is retail starts entering. They start buying in. Where are they going to put their stop losses? They're going to put it below the last low because that's what they're taught, right? So the last swing low was here, and I drew this line out. So we had buy stop swept. We had this previous fair value gap balanced. We've had price come down to take out the engineered sell stops. What I mean by engineered sell stops is when price rallied through here, it's going to make people buy. And when you buy, you put your stop loss. So it's actually engineering or creating the stop losses, the sell stops, with that push to the upside. All right, so now looking into the 3-minute time frame, we can see actually much closer detail the last swing low. And this is a swing low that I wanted to be broken, as signified by this line. Once that was broken, I am looking for fair value gaps within that leg to sell. So I'm looking for price to pull back up into a fair value gap within that range to sell from. Now, I highlighted this one here for a reason, because this was actually the perfect entry. This purple line shows us the middle of the market. It's the equilibrium. Anything above that is considered a premium. Anything below that is considered a discount. So not only am I looking for the fair value gap in that range, but within that range in a premium market. So I found a fair value gap and I found the equilibrium. So as you can see, anything above this purple line is the premium market, and just above is this fair value gap. Just in here. On smaller time frames, it actually is this entire box, but I'll stick on the 3-minute. So my entry would be perfectly right, like literally as soon as it crosses up above that premium market and into the fair value gap, that's where I would like to take my short position. So this would have been more appropriate, but no, I was looking for this fair value gap up here. As you can see, target fair value gap. So the reason why I did not take the trade is because never reached there. So I just didn't take the trade. But now I see this was the one I should have taken, with my target being down here. So it is a nice 6.5 risk to reward ratio trade. So that is nice, but I didn't take it. Now, price did pull back up again, and it did give us another opportunity for an entry, but unfortunately it's not within my trading time and I was asleep. There's a little trade breakdown, a little insight into my strategy, a little insight into the strategy on the market. And yeah, that's it for the video. So I think I'm going to continue to do more of these. It just helps me understand the plan better, and I think it's good content. So there you go. Also, if you guys haven't already, follow me on my other social media accounts. I am really trying to grow my social presence, so it will mean a lot. All the links will be in the description. Got any questions, give us a comment. If you like the video, then like it. I'll see you guys in the next one.